So today we're going to do a dedicated video to Revolution Beauty. A lot of you guys have been asking for this dedicated video, a bit of a deep dive into the stock and to see what is going on here and if it's a buy, especially after the news that shares are going to be suspended. And we'll also mention that in today's video and look at some of the positives, some of the risks with this business, because without doubt there is a lot of risk here, especially when you're talking about a stock where shares are getting suspended. So yeah, we'll have a look into Revolution Beauty for some of you guys. Now, just to let you know, last night we did a live Q&A session. It should be available on YouTube, that if you missed it, you can go back and watch it. It's about 40 minutes long. I think it's the first live Q&A session we've done on the YouTube channel for like a year, and it'll probably be the only live Q&A session we'll do for another year. So enjoy it while it's up there, and we've done one recently. But apart from that, we'll take a look at Revolution Beauty. So Revolution Beauty, a UK-based beauty company founded in 2014 by Adam Minto and Tom Aylesworth. They pride themselves on being inclusive and affordability, so it's a bit of a makeup brand that's a little bit more in the cheaper category, I would say, which is obviously, I would say that in a recession, I think that makeup is one of those products that are not cut back on. I think even in a recession environment, you could be looking at especially a beauty product that is very good and affordable, shouldn't see too much effect because, like I said, there's not much cutback on makeup in a recession. And it uses influencer marketing through Instagram and TikTok rather than the traditional methods of marketing, which has been one of the key drivers for its success. And its products are cruelty free. Now, the management team itself actually comes from a very big background in makeup. I think it's something like 30 years experience. And also they pride themselves on being very fast to capitalize on trends. So more traditional makeup brands can take a very long time to kind of get into the trend, develop a product and launch it. Revolution Beauty pride themselves on being very quick to jump on a trend and make a product very quickly. And that's how they've had a lot more success against a lot of the bigger companies in this space in the last few years. And that's why they've had so much attention drawn to them. And when you look at the numbers, the financial numbers have been actually pretty impressive. And when you look at the makeup brand Revolution Beauty, it's actually a well-known, a very well-received product. If you ever speak to anyone that uses the product, most of the time I've only ever heard really positive things about it. That's probably reflected in why the sales have been so good and they've expanded so well. They've basically started very slow in the UK, launched with a few partners like Boots, expanded into the US recently and made an acquisition to help improve their selling and the logistics through the USA. And they targeted through I think it was Target actually, that they use that as the expansion, and now they're being very picky with who they're actually selling their product with and expanding more and more. And it has had a very successful method of expanding through targeted selling. It's a product that is very well received, very good reviews. I think if you ask anyone that uses it, they like the products and the variety of products that they do have. And I think makeup, people talk about makeup and is it a moat? Is there a moat to it? And I think if you have a product that is a good valuation, known as a very good product, and I think that if you find a product you like, if you were to use makeup, I think if you find a product you like, you're very much going to use that product more and more and rebuy it when you are, when you run out of it. So even though you would say there's not too much of a moat in makeup, I do generally think if you do find a brand you like or a product you use, you're probably going to be a regular buyer of that product. So yeah, I think if you do good products and people carry on using it, then there is kind of a moat in there. And evidence of that through Revolution Beauty is the reviews. So for example, Revolution Beauty, if you go on Trustpilot, actually has 4.4 stars, which is a pretty good review really, especially when you think about most of the time when people actually do reviews, it's always because of negative reasons. If it's a positive experience, you don't generally go and leave reviews. So it's very hard to ever see a 5 out of 5. So I'd say 4.4 is a very high rating. And by the way, this wasn't any coincidence. I didn't pick these companies in particular, but I automatically thought I'll pick 3 other beauty products just to see how they compare to it. And the first one I thought is, well, we'll go with MAC. And MAC actually came up with 1.8. I thought, okay, let's go to Elf Cosmetics, a company that's actually been performing very well on the share price point of view in the beauty space, and it's at a 2.2. And I thought, okay, one more, let's just make it, see it's not a coincidence that all these other ones are bad. L'Oreal Paris, 2 out of 5. And I thought, that's just crazy the review difference. And you can see it already here when you ask people, but if you go into a store that does sell Revolution Beauties on the high street, I'm very sure you'll see a lot of people looking at the stands. The shelves are normally empty on the products, and you can see here, you know, they're very highly reviewed compared to everything else here. And one that stands out in particular is like Elf. Elf is currently on Trustpilot, is rated 2.2 out of 5 stars. And this stock's been absolutely amazing the last few years. It's been on a crazy share price. And, you know, since 2019, really, this stock's been on a very good run. If we just go from 2020, for example, you know, the stock is up over 135%, and you would easily be outperforming the markets by investing into this makeup brand. So it's clear that, you know, if you can select the right makeup brand, then obviously you can get a good performance in the share price. And Elf is quite an interesting one, because if we look at Elf, they're obviously another beauty company. They IPO'd in 2017, I believe it was. It wasn't 2017, it was 2016. I'm just trying to find a date where this article came out here. Yeah, 2016. I knew it was one of those years. I remember when it IPO'd actually. So it came on an IPO. And when it IPO'd, you can see here, it was around $25. It was actually quite well received when it came on the stock market. And then over the course of the next kind of 1 year, 2 year, you'll just see the stock just downtrended. And, you know, this is one of my favorite things to do, is actually look at a stock that IPOs. And then from the IPO, it just seems to lose traction. It just becomes very unpopular. And then it goes from, you know, $25 all the way down to $8. And, you know, if you were picking up in that $8 range, then, you know, you're up 342%, which is obviously then a mega return in this last kind of few years. And yeah, Elf has performed very well, especially when you look at the IPO and the share price, you know, absolutely dumped. But the business carried on performing. You look at the quarterly financials here for Elf, and you've got the business that has 26% revenue growth, net income, you know, 14 million, 74% year-over-year growth, and doing pretty good numbers. So it does show you that makeup companies, makeup brands can be very successful, like Elf, for example. And this is, I think, another good reflection on what Revolution could be, because Elf was a very similar company that dumped off on it from its IPO, and we look at Revolution Beauty and it's doing something very similar right now. And just a quick glimpse at the difference between Elf and Revolution Beauty from a profit and revenue point of view. They're kind of growing at very similar rates. Elf is growing slightly above Revolution Beauty, and it also does have a little bit more profitability, as you can see here. But the difference is that Elf is currently doing 417 million in revenue, and Revolution Beauty is going to do around about 200 million, shall we say, in revenue. So about half what is the revenue of Elf, for example. And this Revolution Beauty is currently valued at 54 million market cap, and Elf is valued at 1.9 billion market cap. It's a major difference in valuations of the business. And yeah, without doubt, Revolution Beauty isn't just quite where Elf is at the moment, but when you look at what they're doing here, it's just very insane to see a big massive valuation difference here between these two businesses, and just kind of reflecting what I think Revolution potentially could be. And when we look at Revolution Beauty, it's currently down since its IPO 90%. This IPO'd around about £1.70 around 2021, and yeah, it's gone all the way down to 17p now, 54 million market cap. You know, this business, like I said, is going to do around about 200 million in revenue, and it's going to be a 0.25 price sales ratio, which is just crazy when you look at it that point of view. You can kind of tell already that this company's very much getting priced at, you know, bankruptcy prices right now when you start looking at these sort of valuations here. So previously, a few months ago, around about the 6th of May, this company was in a fairly good place when we look at that trading update. And you can see already the share price, if we go back to the 6th of May, which is here, which funny enough is when we have had a bigger dump here. But even by then, the share price was already down 30%. And in that trading update, there was still some okay positive direction that this company was moving in. So if we have a look at that trading update, you can see here that the adjusted EBITDA was actually up 73%, which was 22 million. And you can see here the revenue was actually up 42% here as well. And then we went into the trading update that was on the 2nd of August. And this actually was one thing that kind of spooked the share price when this one came out. So When this one came out here, they actually posted that there was a few worrying things that was happening inside the business that was affecting the EBITDA and revenue. And in this update, they came out to say that they have seen some increase and good partnerships with the sales in Walgreens. However, there was an impact because of cost inflation, supply chain issues, and the war in Ukraine. So the war in Ukraine basically stopped them selling a lot of products in Russia, and I think Ukraine did make up a fair bit of their revenue, and that did affect the revenue growth slightly. Without that impact of the revenue growth, this company would have been growing at very good rates. However, the impacts from that did slow it down slightly. And also the impact on EBITDA because of supply chain issues, as well as the cost of inflation, and that did knock the adjusted EBITDA down slightly. But even when you take into the consideration that the revenue was knocked down slightly, if you did take that out, the growth of the business was actually still very, very strong, and it is still growing, which is something important to say. And they did say that there was an impact because of the inflation and the logistic issues, which when we've heard about a lot of UK companies that do a lot of logistic, a lot of supplying, this is a common theme. So we know we've seen a lot of businesses that are being hit by this, and it's important to see if this is going to be a long-term issue or if a lot of businesses will resolve this. So it's a good thing to see that there's not such a demand issue at the moment. The product is still selling, and also this logistic issue, we know this is a common theme, and can they resolve this issue right now? And even if you take that out, you can see here that the adjusted EBITDA is going to be around 18 to 20 million, which you can see here. Now, same again, if we just have a quick look at the market cap here, it's a 54 million market cap. So if we say 20 million, it's only around about 2 times EBITDA at the moment, which is incredibly low when you look at that point of view. And same again, if we just flick back to where the growth was, you'll see here that they are expecting revenue of 215 million to 225 million. So if we do look at analyst forecasts here, you can see analysts, or the one analyst that's covering, is expecting 200 million in revenue. So you can see that's about in the middle of what the company's guidance was. And same again, if you add in the impact from the Ukraine and Russia situation, you've still got growth here from 194 million to 220 million. So that's still very good growth. And then you actually add in the impact of Ukraine and Russia. This is still fantastic amounts of growth here from this business. So obviously there's not a growth issue here. The growth is still pretty strong. The big thing is the impact of the supply chain issues at the moment and logistic issues. And if they can resolve them here, hopefully the business can go back to moving towards that profitability as well, and have decent growth here. And you can see here that at the moment, when you look at the business at 54 million market cap, it is valued very cheap, that it is going to go more than likely bankrupt here. And also the only little thing that I found a little bit negative here is that they did increase the net debt to 21 million. So if we do go on the balance sheet here from Simple Wall Street, you can see here that they actually don't have the updated figure here. So the debt to equity is a little bit higher. It's still very healthy. They're still very much on 21 million in cash here. And I don't know if that's the correct amount, because I'm sure if they took debt on, they would have increased their cash, which might say somewhere down here. But you can see that obviously the balance sheet, there's a little bit more debt here, but it's still very healthy. They've still got plenty amounts of cash. But my only little worry is that before they did IPO, it was a bit of an unhealthy balance sheet. So key thing is management don't keep taking debt on, because we don't want to see a situation before the IPO. But the thing is that it is a founder-led business, as you can see here. Like we said earlier, Tom Alsworth owns 15% and Adam Minto owns another 15%. So between the founders, they do own 30% of the business. So they're obviously a CEO run company, 30 years experience in the business as well, which is really good. And the other reason why the share price dropped is because there is currently an auditor issue going on at the moment, where they are currently not signing off the results, which we'll talk about in a minute. And that's led to the share price being suspended at the moment. But with all this here, what has happened is Boohoo have actually announced an investment into Revolution Beauty. Really positive thing about this is that Boohoo themselves obviously will sell Revolution Beauty's product. So Boohoo are not going to invest in the business that they sell the products and go, why would we invest in that? Because it's for us, a business that doesn't sell a lot of their products very well on our website. The fact that Boohoo themselves have looked at Revolution Beauty and gone, you look at the company here, it's at 17p. We look at what's shifting through our websites. This business is doing good numbers. We're going to buy this here. That's a good sign from Boohoo as well, because they'll have a lot of data that we can't see, and probably even have a few conversations that we don't know about. And for them to kind of buy, I think it's like a 12% stake in the business, at these sort of valuations, that's a really positive sign as well, to see someone else like that come into this stock here. And even though the share price today is basically flat, and today was the day that the share price is, the stock's going to get suspended, it was quite funny to see that that's how much negativity is priced in now. That when we do get this suspension today, it's not shifting, because people are like priced in the worst case scenario with this business. Is what we were saying earlier. 17p, Revolution Beauty is now priced at that. It's basically is more likely come to an end, like Cineworld. And when you look at it right now, when we just went through them financials together, you can see here that the business very healthy still on the balance sheet, nothing like a Cineworld balance sheet. You look at the growth, there's still demand, they're still selling products, it's still doing really well. Obviously, they're taking a hit on the logistic issues at the moment, which is worldwide through a lot of businesses, which we've seen at the moment. Previously, not too bad on the cash burn, which hopefully they can get back to profitability. Analysts are forecasting profitability in the next 2 years. They're not losing a ton of money either. So yeah, hopefully some of the investments do pay off. So key one to watch there, or key things to be watching. And I'm also going to shout out, before I go back to the whiteboard, this interview here. So it's by Vox, I think that's how you say it, Vox Markets. They actually have an interview with Revolution Beauty's CEO, Adam Minto, and there's also another one as well that's about 36 minutes long. And if you want a bit more information on the business or listen to the management team here, that's also a really good interview to listen to. So go watch that if you're interested. So overall, when I look at this, I'm seeing a business here that still has very good growth, very good demand. It's making good partnership moves with like Walgreens, Target, expanding into the US. The US is having really good growth. The UK is still very strong. The products are very highly rated. And at the moment, the big thing is it's getting impacted with a lot of logistic issues. And we know that's worldwide. And can they resolve that? If they resolve that, then we have a business that's still growing, and then hopefully we move to profitability. So I think there's a good business here when you look at that valuation. 54 million, like you said, we compared it to Elf, that's obviously double the size of this business, so it is going to be a higher market cap, but that's like a 1.2 billion market cap, and this is a 54 million market cap. So even if we just said on a revenue point of view, if we matched it, then it would be around a 600 million market cap. But obviously still Elf would have maybe just slightly a little bit better growth, and obviously is making profit where Revolution Beauty doesn't at the moment, which is one key thing to be looking at. So overall, I'm looking at this share price here thinking you've got a stock price to bankruptcy, and when you look at the business, there's still a lot of really positive things going on with it, which makes me really interested. Now, without doubt, there's two big risks here. The two big risks which we spoke about is obviously profit. Profit is key. It doesn't make profit compared to like an Elf, for example. And obviously the big thing that's really impacting it is them like logistic issues that are going on right now, and can they resolve them issues? So that's one of the big risks here. Can they kind of move to profitability? Now, for me personally, I look at that and think there's so many companies having these issues at the moment, though they will resolve them. Because there's so many businesses having it. Otherwise, there's going to be a lot of businesses that are going to go kaput, and we're going to have major problems in the economy. So yeah, I think this issue is resolvable through Revolution Beauty, especially when they get more integrated and controlling costs. A few months ago they're doing a very good job of it, but now it's just deteriorated a little bit. So I think they can resolve that. Obviously, the next major issue is this suspended shares. I think this is a bigger problem than this. Now, with the suspended shares, obviously the issue is that because the accounts haven't been signed off, and with the accounts being signed off, obviously they cannot have the shares on the stock exchange. When the accounts are signed off by the auditor, everything will be okay. So that should happen by the end of September. It should. Now, there's no guarantees here. We do not know what's going on behind them closed doors, which is always what you got to remember. But they should be signed off in a month. They're not signed off because there's delay with auditors. there's a lot of that well known out here, but without doubt there's probably something in the accounts, and I think it was made aware that the accounts, the auditors have seen something that they're not happy with. Whether that will lead to questioning, more information, deeper dive, maybe the numbers are incorrect. Let's take worst case scenario. Let's mention the word fraud in numbers. Our Revolution Beauty, fraud in the numbers. I think when you look at it from that point of view, I can't see a founder-led company that has set up, that didn't need to really set up this business because he was already, quite high up in another business. And both of the founders haven't really released that much shares. They still own 30% of the business. I could not see why they would do, start fraud in numbers. I just can't see why they would want to do that. Don't get me wrong, it could happen, but I can't see it happening. And I think what will have happened, and potentially this is why the CFO recently left as well, is I think there's been a bit of an error with these accounts and they should be resolved, and maybe there'll be, there's a correction because the actual gross margins were a certain amount, or this cost here was not implemented, or a cost from an IPO was not done correctly. Potentially that's what it would be. It would be something maybe $1 million incorrect in a certain category. And I think that personally what will happen, and then the auditors will be fine with the accounts and they'll sign them off, and then it'll be okay. And on the day, that will be the big thing. That's the biggest risk, because if it comes out that's it, then the share price should be set to run. At the same time, if it's something major, that's obviously going to be a big problem. So this here is probably the key thing, and will be the catalyst if the share price does really well very soon or not too well going forward. But I don't think it'll be a major issue. And I think when you take this out, this can be resolved. You've got a business that's priced at bankruptcy, doing good things here. It's very high risk. Personally for me, I have bought a couple, more than a couple. I bought a position in Revolution Beauty. It is my smallest position in the UK portfolio. I am going to play this as a bit of a high risk play with obviously this overhanging. I think this will be okay. I think the accounts will get resolved. I think they'll come back to trading. I think they'll resolve this issue. And when you look at what the share price is priced at, 500 million market cap, I think that this has really big room to rocket up. And rocket up to very good or more of a realistic valuation what it should be trading at. However, like I said here, there's these two big major risks hanging on it. And that is a risk. I think it is resolvable, but that is a risk. This in particular is probably, like I said, the bigger risk one. And when it has got two big risks on it, I am playing it as a high risk play. There is that element that it could go wrong. That's why I'm keeping it as my smallest position. However, there's also that element that if this turns out to be okay, the share price at the moment, when it's valued at these sort of levels, and you're looking at the business and it's still performing quite strong, it's still got a very good balance sheet. This for me is the difference between like a Cineworld. When you talk about high risk plays, this is the difference between when we talked about Cineworld a few weeks ago and Revolution Beauty. Cineworld is valued at bankruptcy level. Revolution Beauty, same again. But the thing is, you've got a company here that is growing, Cineworld isn't. You've got a business here that has a very good balance sheet, Cineworld hasn't. And Revolution Beauty, in my opinion, has the ability to get back to doing decent amounts of growth on revenue and already doing revenue, but getting back to profit. Cineworld, not so sure on. So with Revolution Beauty, I think it's worth the risk, and I have obviously owned some shares. Like I said, it's a small position, it's a high risk position, but I think when you look at the 50 million market cap here, if it does turn out to be okay, I think there's serious potential of upside. But like I said, like I was saying, there is high risk here without doubt, and I've got to be aware of that, and I thought I'd make you aware of that as well with this one. So yeah, hopefully that's a useful video on this stock. It's quite a long one, bit of a deep dive. These deep dive videos take a long time to put together, but I feel like these are the best videos with the most information, even if they do poorly, and I still want to make sure I do them on the channel. So yeah, I hope you enjoyed it anyway. Let me know what you think of this business in the comment section as well. And yeah, hit that like button if you're new, subscribe, and I'll see you in the next video.